I think we just jumped right into this, right? Our panel is innovation in Bitcoin. So obviously there's a lot of things happening. There's a lot of always a lot of exciting stuff. So I'll just kind of open the question up and see who wants to jump in the first one. Hot topics, right? We got agentic wallets. We have digital credit. Everyone's talking about yield. We're talking about Lightning. What is real? What's going to be a real thing in 5 years? Who wants to dive in first?
I personally think the digital credit story is one of the biggest stories happening in the entire Bitcoin landscape in the Bitcoin market at the moment. These securities this is structured finance. We're taking the same components of other financial institutions, and we are reducing volatility of Bitcoin exposure by pushing a tranche of capital on our balance sheet to the senior position. So we are taking this volatile instrument, being Bitcoin, and we are converting it into a low volatility tranche, and our common equity is an expression of a high volatility representation of the underlying Bitcoin. So the digital credit instrument is effectively an asset-backed security, and when you look at the landscape of the credit market, these instruments look very attractive from a risk-return profile compared to some of the other credit instruments in the market. And then you think about how, and we'll probably get into AI and how AI is changing the world. You look at the credit landscape of the rest of the market, and when you underwrite credit risk of a traditional company, you're underwriting future cash flows. And we see this technological innovation with AI, and that comes in and that actually disrupts your probability analysis of future cash flows. And so when you see a probability analysis of future cash flows balloon drastically, that should change the underlying theoretical risk profile. And when you have these assets on your balance sheet, that relative risk profile looks very interesting and compelling. And these assets are trading significantly higher yield relative to anything else in the market and significantly more liquidity. And we don't have to deal with, quarter to quarter mark-to-market financials.
Yeah, definitely. And I just looked. Stretch traded $1 billion. I saw it was quoted trading $1 billion last week. It's paying 11.5%. So yeah, does anyone else want to weigh into digital credit?
Well, I think the first question was what's going to be real in 5 years.
Yeah, sure.
And I, when I think about that, I look at what are real people touching. A lot of the space, can get pretty esoteric, or it's going to happen, I promise, in the future. But actually, all those things you mentioned, we're seeing directly out of our customer base. We, our users who have been integrating Bitcoin deeply into their lives, and we've been helping support them. Now we see them completely ditching most of the traditional bank accounts, and now they're running entirely on Bitcoin and Stretch. And we have seen it wholesale replace major functions that they had looked to traditional players for. And that's happening today. And the only thing that's stopping it is the distribution is just not there. The pipes aren't there. Today at this conference, we've seen a few announcements of people integrating digital credit. Jeff and I were just talking about ways that we're thinking about it. We think about it from the lens of both our equity, what can we do, but also what do our customers want, and they do want it. And so for me as a builder, I just go where the demand is. Other things are interesting, like Lightning, you mentioned, is something that we've talked about for 5 years. And it has been deprioritized in ways that I didn't understand or didn't expect. Our customers aren't really touching it, but us as a business, we're touching it quite a bit. And so I think we're going to see all of these continue to develop, but the time scale, in 5 years, a lot of these things are just real today. And the only thing stopping it is just distribution and awareness of these products.
No, happy to jump in as well. I think, first of all, 5 years in Bitcoin is a lot of time. We have always to put that in context. What has happened over the past 5 years is mind-blowing, so I can only imagine where we'll be 5 years from now. What I think will remain real is what both Will and Jeff are saying. I think more and more people will be kind of operating fully on this Bitcoin standard, right? Like thinking about day-to-day lives, like measuring their financial health on a Bitcoin standard, getting exposure to Stretch and other digital credit instruments, holding a good portion of their wealth on Bitcoin. I think we're seeing announcements. It's becoming more and more easier to do this type of transition. And I think that'll be real 5 years from now. It's already real now, but I think we'll still be here and in a much more broader way, both in the US and other corners of the world.
Yeah, I mean, I really don't have much to add. I will agree that 5 years is a very long time, and quite a bit can happen that you don't expect, and also a lot of things you do expect might not happen at all. All right. So one of the things I'm keeping an eye on is future improvements to the Bitcoin protocol that can unlock some new use cases, scalability, and layer 2 technologies like ARC that can benefit from and kind of enhance and complement things like the Lightning Network. Will open up innovation quite a bit. Whether that happens or not, it's anybody's guess.
Yeah, I just add the you hit on distribution, but I would say the last 2 years, 24, 25, even starting 26, this is about building the rails. And the rails of the traditional financial ecosystem are becoming very apparent. You've got banking infrastructure that's coming in the door. You've got these credit instruments. You've got corporations that are adding it to your balance sheet. You've got multiple issuers now in the market. And those rails that's setting the foundation to be built upon. And that's what will guide the next 5 years.
That's perfect. And actually, I kind of want to touch on something you said kind of about Lightning, right? So how Lightning is like maybe your customers aren't touching it, but you as a business are, and you're talking about Rails. Like, are things like Lightning going to be kind of abstracted away? These are going to be the back end plumbing, or are these going to be the things where you use a Cash App and you're like a retail user is actually actively choosing to use Lightning or this
thing? Ultimately, it's all going to look like day to days. Nothing has changed. At the end of the day, what do I want as a customer? I want to custody my funds in a place that's safe. I would like to put it in a place where the money works for me, not for third parties. I want payments to be reliable and work. And ultimately, that's what people want. And under the hood, all of this stuff is getting ripped out and changed. And you look at all Lightning, digital credit, Bitcoin, but in traditional banking is also getting completely upended right now, where essentially all of the features of a traditional bank have been compressed into APIs that anybody can access. And when it becomes compressed in that way, it's about, hey, well, do we direct to our money market, or do we just pipe in a digital credit product, or do we add it as well? These things can happen much faster, and so the pace of innovation is going to continue because they're not gate-kept in these traditional institutions anymore. Most banks that are starting now are not serving end customers, are serving businesses who are then going to serve end customers, and their product is making it as easy as possible to deploy banking features wherever. We saw Mr. Beast launch a banking app. We are seeing an incredible upending of what we call the bank, and both who is running them and how they're run are all being changed.
This stuff will be totally ubiquitous, right? You go back, you could look at some of the old commercials of like Burger King adopting credit cards, right? And they're so funny because you go back and you look, and the people that they're talking to are like, oh, I don't want to use a credit card to pay for my burger. And it's like, okay, well, fast forward, and what is cash, right? Does anybody use cash? No. It's just this society has adopted this new technology, and it just kind of happens over time because Will's using it and I'm using it, and then my family starts using it and their friends start using it, and it's an evolution of how society interfaces with money, and that's being just completely gutted and upended and reconstructed with a better monetary base.
I mean, Steak and Shake has a booth at the Bitcoin conference, so yeah. Okay, cool. Like obviously Bitcoin yield. A lot of people are talking about it. How do we build sustainable Bitcoin yield in a real way? I mean, we've had a lot of yield products across digital assets that have famously failed. What does real sustainable Bitcoin yield look like? And this can go to anyone.
I mean, for me, the question is always, where does the yield come from, actually, right? Obviously, everybody here is probably familiar with all these DeFi products offer 15% APR, and those tend to not work out very well or for very long, right? So, what is the source of the yield? Is it something that's actually creating real value out in the market somewhere, right? The clearest example I think we've seen of that can be considered like Bitcoin native is the fees you get from operating a Lightning node, for instance, right? Routing transactions, being paid a fee for that. Mining in itself, you can almost consider a type of yield. The trading of hash products on top of that, you can generate yield from those and deliver real value to miners who are trying to derive hedging, right? So those things are real, but they're not that big. And I think what people are looking for is obviously more juice, more yield, something that's like very attractive. But you're inevitably going to get to a point where the higher it is, the more risky it's going to be. And that's just kind of a universal truth there. So I think the future is going to be creating different products, different yields, but also different risk profiles and being transparent about that and let customers actually self-select into what makes sense for their financial position.
You think about the concept of yield, and the concept of yield is really risk taking, right? So it is, you're putting your assets or your collateral at risk in exchange for something. Like you are taking risk to generate that yield. So the question, where does it come from? It comes from risk taking. There are several different types of risk taking, and the type of risk taking that a person can do is different than the type of risk taking that a corporation do. For example, we are generating Bitcoin yield by taking risk on issuing a low volatility tranche of senior capital on our balance sheet. A individual cannot take that risk. Like they cannot construct that risk. You have to have a corporation. You have to have the structure. You have to have the ability to interface with the banks, right? It's a complicated risk-taking structure that we can take, but individuals can't take. That being said, I think the advancement of individuals taking risk in the market is evolving super rapidly. We're seeing like all of these lending products that are being built on top of this. You're seeing, covered calls strategies. You could convert your Bitcoin in kind and start operating in the equities market with IBIT and some of these other instruments. And ultimately, it all comes down to risk taking, risk tolerance, and to your point, I don't think they're communicated very well. And as that market continues to evolve, that risk taking becomes more apparent.
I think like we hit, I fully agree on the risk aspect that the yield comes from taking some type of risk. I think what has been very challenging in this overall ecosystem, and we just seen with DeFi a few weeks ago, is that a lot of those risks are not fully understood. And maybe that's why we're seeing kind of a shift of more, to some extent, public companies with requirements and other forms being built. I think more and more it'll be a concept. Like the more that Bitcoin grows and the more that it becomes a larger piece of companies or investors' wealth, the more they'll be looking for ways to monetize that. The question, it will be that clear, the risk you're taking, should we be taking or not? But I hope the path is for more clarity and more transparency, because we've seen a lot of bad stuff in the past few years.
This market's evolving so fast. It's so fascinating. I mean, for example, some people are able to take out loans on their underlying Bitcoin, use the Bitcoin as collateral. One interesting thing I've seen just recently is, so the problem with that is the Bitcoin is volatile, right? And you could get margin called if Bitcoin drops 50%. You're like, I wasn't planning on that. And then you lose all your assets, and that's an issue. And now, what I've seen recently is, for example, Salt Shield is interesting. They have created almost like an insurance product to protect against the margin downside risk, and that's an interesting innovation in the market. And people are thinking creatively using novel mechanics of the traditional financial ecosystem and weaving it in.
You're actually all kind of bringing up an interesting point. Like we talk about innovation, and we normally talk about products and kind of the offering, but it kind of sounds like you're also saying like the messaging and the narrative and the education is also kind of where there is a gap. How important is that in like as we're creating new innovative products and as we're building these new solutions and offerings? Like, how important is the education and I call it a narrative because I work on a marketing team, but like how important is that? What is the weight of that in kind of pushing these things?
I personally think it's pretty foundational. I'm the CEO of True North, which is kind of an educational platform talking about the frontier of this marketplace. And I think the audience and the consumer it's really important to know. Like, for example, we're issuing a perpetual preferred equity security. That yield instrument is attractive to actually many of the people that aren't here, right? Like our main audience is, the folks that are interested in credit, that are interested in yield products with low volatility. It's more of like traditional financial ecosystem. So for us, it's communicating, we're underwriting Bitcoin for you. We are taking the risk on our balance sheet. This is what it looks like. But everybody else's yield product is different with a different marketplace. So that education is pretty critical. But I think most of the yield products are still relatively opaque, right? You can ask and understand, try to get an understanding of how the yield is delivered to you, but it's generally a black box, which is a bit difficult to underwrite as an individual.
Awesome. Yeah, I completely agree. I do want to. I'll shift the conversation a little bit. Ariel, I know that you're founder of an AI company, Bitcoin mining. Everyone's talking about Bitcoin mining, AI compute, competing for basically everything. they're competing for capital, hardware, time, and energy. Do you see this? Do you see this kind of like pushing Bitcoin forward and promoting that, or is this kind of a detractor?
Yeah, so I'm the co-founder of Hydra hosts. We specialize in deploying AI infrastructure and monetizing it, and we're working with a lot of different miners who are looking to convert their sites from Bitcoin into AI. I also did a lot of Bitcoin mining myself back in the day, so I kind of have seen both industries. And what's happening right now, the common sentiment is it's basically a bear market for Bitcoin mining, right? People are saying, oh man, if I could convert this to AI instead, my returns are much greater. So everybody's interested in trying to make that happen where they can. And for the most part, that's true. And the consequence of that is I don't think it's good for Bitcoin. I don't think it's bad for Bitcoin. I think it's different. And I think it's going to force an evolution on the mining side of the business where it's going to be less and less common, and then probably not real at all, that you would have these super mining sites that we used to have, which are megawatts and megawatts of power, right? All that's going to become AI infrastructure, and instead you're going to see mining become more distributed and more diffuse, right? One of the things that Bitcoin has as an advantage over AI is that you don't have a customer, right? There's nobody on the other side that's like using it, right? It's interruptible. You can turn it on and off whenever you want. So that kind of dispatchability is still a huge advantage for certain use cases that AI can't help with. So for example, in any situation where you're taking advantage of the excess heat to warm your home, warm your hot tub, like whatever that might be, that's always going to be something that Bitcoin can do that, a GPU cannot do, right? So I think we're going to see this kind of advent of AI displacing the kind of giant mega sites for Bitcoin mining, and more kind of consumer applications for mining entering kind of the ecosystem. And that is its own form of like mini yields, right? If you've got, stuff that's generating Bitcoin revenue for you while also doing useful work.
I'll actually ask a question on, because I agree, Ariel, on that's the trajectory you're seeing. Wouldn't that be positive for Bitcoin in terms of decentralization and having, instead of a few big names with mega data centers running a big chunk of the hash rate, like actually as distributed as possible?
Yeah, I think you can make a case both for and against. Like the fact that it's going to be more distributed in terms of hardware is definitely a good thing. But what pools are those connecting to? Is that going to become even more centralized? Because if you're running a Bitcoin miner in your house, like you have even less incentive to have your own pool than a small data center company, right? So maybe the hardware becomes more decentralized. Maybe the mining pools become even more centralized, right? It's really hard to say. So I could kind of see it playing both ways.
Awesome. And as far as AI goes, maybe from a retail lens, are you seeing kind of the ask for we see agentic trading with agentic wallets, maybe like I don't call it robo advising. Are you seeing on the retail side, are you seeing a push
I mean, absolutely. I think from both an organization perspective and our customer demand is AI is completely reshaping that. At Fold, every single team member is plugged in and using these tools very heavily, and it has meaningfully changed the pace of how we ship. At the same time, we see our customers also taking this up, especially our customer base tends to be very open to being a early adopter. You know, we're at a Bitcoin conference. Takes a lot to early adopt Bitcoin when the world's telling you you're wrong all the time, but they charge ahead. And so we have customers asking, how can I provision or authenticate my accounts and allow my agent to run financial activities, my business, automate certain things. We've also seen demand from agents coming through, and it's interesting running when your customer is not a person on the other end, but essentially a very powerful algorithm and compute that it doesn't care about emotional pulls of brand and ideas. It is a very objective look at what's the offering, and so you're getting these incredible looks at that cut directly through marketing and essentially is what is the best option for us. And so increasingly we're coming to a point where a lot of the tools that banks and financial services have used to dress up and attract customers are not fooling the robots. They don't care about that. They don't have the emotional pulls. So we're seeing that come in from our customers. We also, you mentioned robo-advising. We have a project in-house that we are working on that allows you to essentially engage with your financial activity and query that against it in a private way. Of course, you don't want to upload all your financial, history up to, someone's centralized AI. But if you have a private instance, maybe there's opportunity there where you can get insights that it used to be an entire company built around this. Now, Fold has shipped that as an internal beta in a week, and customers will start to use it later this summer. And so I think in every single way, from our product, our customers, and the team, it's reshaped us.
Obviously, we all know Bitcoin is like the technology you could say is conservative and it's like meant to move slow. Is AI going to be slow? Like, can AI interact with Bitcoin itself? And if yes, like, how do you see that?
Yeah. First off, I'm going to echo Will's comments on a team using AI. It's incredible. These things are moving so fast, and you have an entire team using them. It's the pace of change is incredible, and we're moving so much faster than any of these traditional companies that can't use them. But thinking about AI and Bitcoin interface, Bitcoin Policy Institute actually did a study, an independent study. They were looking at artificial intelligence and how it interfaced with money, and the preference for a store of value was something like 60% Bitcoin. The next closest was, I think, 30% stablecoins, and I think fiat ranked at like 7%. So it was the last thing that AI wanted to interface, which was interesting. And then you think about the development of this entire ecosystem and like thinking about how the market actually works. Like I'm really interested in the plumbing of the market. And 20 years ago, computers were barely used in the stock market. And now something like 80 to 90% of the entire stock market is computer algorithmic trading. And that is only going to accelerate and get further and further. Now you've got all these instruments that you've got Bitcoin that trades 24/7, 365. Now you've got other expressions of Bitcoin that trade in the open market. So there's arbitrage opportunity. Now you have these credit instruments that are a function of the risk that can be calculated 24/7, 365. Effectively, you create an entire arbitrage surface where it's really attractive for the computers to interact between all of these instruments. And it's more attractive than any other traditional financial arbitrage ecosystem because the relative yield, the liquidity, the understanding of the risk profile is just not there. So I could see this accelerating and expanding very rapidly as the computers start to interface with the credit market a bit more than they have in the past. Just thinking about algorithmic trading, it was born in the equity market, and it's just pretty much non-existent in the credit market because it's not very liquid. And the creation of these new products establishes an arbitrage surface in the credit market, which is just a fascinating development of the ecosystem. And AI will prefer to operate in that ecosystem.
So AI agents are Bitcoin maxis?
Yes.
You say AI is for Bitcoin maxis?
They are Bitcoin maxis.
Oh yeah. 70%, not yet. Ariel, I know that like we were talking a bit before about kind of the Bitcoin hash rate and how this was kind of like it was kind of like the first global commodity market for compute. Is there another Bitcoin native market that gets built on top?
Yeah, it kind of ties into the first thing we're talking about, yield. Like Bitcoin hash rate and the markets and products people build around that. It's very interesting because for a long time, really since the 50s in some academic papers, people have been interested in making commodity markets for compute. And what that means is different in depending on the context. But the idea that you can like commoditize and make compute something that's fungible became very easy with Bitcoin mining because, you know, hashing is hashing. It's like pretty straightforward. You're either doing it or you're not. There's no apples and oranges. Like it's all pretty uniform, right? So we saw that with hash markets and products of various different types. The question of whether there's something beyond that Bitcoin can help facilitate, I think, is an interesting one. The answer is kind of yes and no. Hash rate is unique in that it is Bitcoin native, so you're not really dependent on an external source of data, right? Like it's kind of inherent to the Bitcoin protocol and the difficulty and the time of blocks being mined, et cetera. But I do think, especially as you know the Bitcoin protocol continues to improve, Lightning Network improves, innovation like ARC improves. There's a lot more expressibility that's possible, where you can start trading different types of contracts. And I think in a world where, you know, for example, agents are heavily using the Bitcoin network for transactions, they need their own services, they need their own hedging. There's going to be very interesting opportunities to see how you can use smart contracts on Bitcoin and Bitcoin Layer 2 to really facilitate very unique use cases like that, where agents can interact with each other. They can not just exchange things back and forth, but write contracts between each other, and building basically a commodity market on top of that, products on top of that, derivatives for trading, I think is something that's definitely very possible. How that's going to look like exactly, I have no idea. You know, we'll have to see. Again, 5 years is a long time, but I think we might see some crazy things in that span.
And okay, go ahead.
The computers are going to think faster than we can, and they're going to make
Already do.
decisions. They're going to make decisions way faster than we can, and that's that they're going to interface with all of these types of products.
You brought up Lightning. It's come up a couple times. Like Layer 2 has come up a few times. Is Lightning going to have its moment? Is this bet on? I mean, obviously, all of us here want to see Bitcoin become the true, not just a store of value, but the method of payment. Is Lightning now? What is holding Lightning back now? And are we going to see it kind of leapfrog to the front?
Yeah, so I've been involved in Bitcoin core development since 2013. So I've seen quite a few iterations of, you know, the debate around scaling Bitcoin. And one important thing to mention that puts Lightning in context is when it was initially proposed, Lightning was never supposed to be a silver bullet for anything, right? If you look at the original Lightning white paper that they wrote, they say this can help Bitcoin scale along with a block size increase of like 20x or something. You know, I forget the exact number. But they were very clear from the get-go, like this is not going to solve all of Bitcoin's problems, but it is an important piece to that, right? And I think that kind of disconnect between, you know, like what the actual reality in the paper and in the math was and how it was marketed and how it kind of got away from people in terms of like, oh, like what is this supposed to be? It's supposed to solve all our problems. Definitely a lot of overpromising. I think the Lightning, when you put it in perspective, has done an amazing job in doing what it can realistically do, right? And the moment you're kind of describing is Lightning, I think it's becoming more and more widely acknowledged, is really best used as kind of a glue between all these other L2 platforms that folks want to make, right? And to make those, for the most part, you do need some further improvements to the Bitcoin protocol, just like Lightning did, you know, with SegWit, in order to be enabled, right? So a lot of folks are trying to work on that. Obviously, progress is not as fast as I would have loved to see, but I think Lightning's been doing a great job. I think it's actually outperformed my expectations in terms of how useful it is from a retail perspective. And really the superpower it's going to have is less retail and more facilitating kind of like the rails that the consumers, the retailers don't actually pay attention to on the back end.
I think if you were at this conference 2 years ago, Lightning was every single talk. It was plastered over everything. And I think the healthiest thing to see is that I may have seen 1 or 2 talks about Lightning, and it's less indicative of a failure of Lightning and more indicative of a expansion in what is being worked on, and it's no longer dominating the conversation. And so I think that is extremely healthy. And this talk here, I mean, we're in each question, we're going from mining to digital credits, agentic payments, and it's just indicative that the world is much bigger now for Bitcoin. And the days where the Lightning discussion was completely taking over was more reflective of Bitcoin as a much more insular, closed community that was very technically oriented. But we have now kind of crossed the chasm. Bitcoin is ubiquitous, and there are people building on it and taking whole new perspectives that just are not maybe party line with what the community would have supported at years ago. And I think that's only healthy. It's a very healthy thing.
We're maturing. A question on Lightning, right? So there's like Tether announced, I think last year, that they're trying to bring USDT to Lightning, but a stable coin is obviously fiat backed, right? So like having a fiat backed asset on Bitcoin is, I mean, it's a bit paradoxical. Does anyone have an opinion about what, I mean, does anyone have an opinion on kind of basically bringing a fiat-backed asset onto Bitcoin and having that kind of be a sort of Trojan horse, I guess, to bring liquidity, to bring volume?
Yeah, I don't see it as that paradoxical personally. I think the market wants what it wants, right? And at the end of the day, what it does is it does reveal kind of a flaw in some people's thinking where Bitcoin success is tied to success on retail exchanges, right? And I think that's really the last step of Bitcoin adoption. And it's for the reason that folks are demanding stable coins, right? Like Bitcoin's just too volatile to be using day to day for most people, especially, in most of the world where they're have very few savings, they're, living paycheck to paycheck or whatever they can get their hands on. Like you can't also deal with Bitcoin volatility at that scale. You want dollars, right? But you want dollars with access to financial infrastructure that you actually have access to, unlike traditional banking in a lot of parts of the world. So I do see it as more of a Trojan horse. Like it's solving a different use case than Bitcoin is. Bitcoin is much more a savings technology, and as it matures, as it grows, as there's more products, as there's more exchanges, it will stabilize over time on a day-to-day scale and become gradually more useful for the things that people are using stable coins for today. But it's definitely not a failure at all that it's like, oh, there's stable coins on Bitcoin. Like we want stable coins on Bitcoin more than we want them on other chains, because that network effect, that usefulness for agents, for all these different use cases, we want that to aggregate to the Bitcoin protocol and ecosystem more than fragmenting across various different platforms.
I would echo that. Again, putting in perspective, like Bitcoin is still a very nascent project. Like we have made amazing success, and I agree with Will. I think he was spot on. The fact that Lightning is not the main topic any longer is not doesn't mean that it's failure. Is that the ecosystem is growing and become much broader, and now we have from the retail and the hardcore Bitcoiners building, and we also have Citibank and other big banks that we never imagined would be here. So again, it's very early on. There's a lot to be built, and I wouldn't say it's a failure. It's just a current innovation. Bitcoin will eventually become, if it fulfills its mission, a world currency, but we're not there. Volatility is real. You go to parts of the world that if you have to pay groceries in a week, you need something more stable. If you're trying to send money from the US to Latin America to Africa, you need something that lands at the same price point that you send it. So I think it's an evolution. I think it's much more Trojan horse than a failure. And we're building slowly, but we'll get there.
One fascinating perspective here is that you've got this really volatile asset. We all agree. And now there are transformers. Our company is a transformer. Strategy is a transformer. The companies that are doing stable coins, they're transformers, right? You're taking this volatile commodity and you're transforming it into another type of instrument. And now that could be built on, right? So we're talking about Lightning being layer 2. Digital credit's a layer 2. So there can be a layer 3 that's built on top of digital credit. right? You could sailors running around to all the banks saying, look, take this digital credit instrument, put it in your bank, offer a savings account that pays 8%, take the difference between my instrument and that 8%, and that's your risk buffer, right? And so when you start to imagine a world like that, that starts to become a lot more appealing to a lot broader of an audience. Like everybody here is a bit crazy, right? Because we could all stomach a 50 vol asset. Like you're all crazy, right? Like, but not everybody can do that, right? And in order to interface with a larger portion of society, you need something that's a little bit easier to interface with. And you know what's easier to interface with? A savings account that pays 8%. Right? That's easy to interface with. There's infinite demand for that. I just want a savings account that beats the monetary inflation rate, right? And nobody has that right now. That is a product that is good for the entire world. And so that these instruments they're being created utilizing the underlying commodity can help change and redefine how the world works. And that could be stable coins, that could be these digital credit instruments, that could be any layer 3 that could be built on top of any of these things. But they're all, as you could see, it's like it's part of this entire ecosystem. Everybody's pushing forward in different avenues based on their different backgrounds, and that's what pushes us forward.
I think that's a great point. I love the layering. It's not just about it's not just about the technology. It's about the product offering. It's about the narrative, which we talked about too. Guy, maybe this one could go to you. I mean, like obviously we're here. We're in the U.S. We're like very U.S. centric. Our minds are. It's hard to go other places, but we see a lot of like in a lot of places around the world, Bitcoin is a necessity. And it's not necessarily it's not a hobby, it's not a curiosity, it's because people need it. Is there something that the US is maybe not that the US is missing, or that what are we not paying attention to that maybe the rest of the world is focusing on?
I wouldn't say it's missing, but it's a little bit of what we touched upon. So, like U.S. is by far the wealthiest country around the globe. That's not the reality anywhere else. So when you go to parts of, like I'm from Brazil, when you go to Africa, Latin America, other places, the day-to-day necessity is to pay groceries next week, right? And not that many people have enough capital to be thinking on the long term. So Bitcoin brings a solution. We've seen hyperinflation. We've seen capital control. We've seen major problems with currency debasement in other parts of the world that the U.S. hasn't seen as much. It's much more silent here. We know what's going on. That's why we're here. Like we know what the Fed is doing, but it's much more less dramatic. When I was growing up, like my folks would gather a paycheck, would go straight to the grocery store and spend it in the first day, because a week later you buy 20% less goods. So Bitcoin brings that solution, but while it's still a volatile asset, it doesn't fulfill all the needs right now. So I think on one hand is critical. That's where we should go to. While it is volatile as it is, that's why you see to some extent more stable coin adoption in some of these corners of the world than Bitcoin. And on one hand, it's painful. Love to see Bitcoin all over the world at higher adoption, but at the same time, it's understandable, right? Not everyone is already on the store of value. They're trying to live day by day, and to live day by day, being able to transfer value in a fast way through the internet is critical, but also avoiding the volatility is a major concern. So I don't think the US is missing, but I think that's for sometimes it's hard for people to understand why stablecoin is being so adopted in countries like Argentina and other, like it's a lot about living day by day and trying to pay for groceries next week.
Yeah, that fits in perfectly to what we were just kind of talking about, the stable coins and the Trojan horse. If anyone has a question, we have about 5 more minutes, but so if anyone has something, you feel free to throw your hand up. But I guess is there anything that we didn't touch on now, like that maybe not some people aren't thinking about in this room, that as when we talk about innovation in Bitcoin, that like.
I'll just piggyback off of the last question. I think one of the things that we've taken for granted here in the States is this whole topic we've been discussing, innovation and really utility on top of Bitcoin, these products we're discussing. I feel like, especially for Bitcoiners based in the U.S., the conversation for a long time recently has been too dominated by like number go up, right? Like, I just have to buy this thing and hold it, and like I'm gonna get rich, and like that's the primary utility this thing is deriving for me, right? But that's not true for a whole giant segment of the planet that doesn't even have the ability or the liquidity to have any kind of savings, right? What they're looking for is real solutions. What they're looking for is a savings account that beats inflation. What they're looking for is these kind of financial rails to access services and capabilities that they don't have through traditional banking, right? So one of the exciting things I think about the whole agent conversation and AI is that that's all kind of the same stuff that could help those folks that will also benefit AI. It's really shifting the conversation, the focus into these layer twos, into these different types of utility that Bitcoin needs to actually be successful. And, number go up is just not good enough. It never was, right? And it's really kind of focusing the conversation to mature more. And how do we keep actually making this thing better and more useful than just assuming it's done and we just have to sit around and wait and get rich?
I love that. Building real solutions for real people is why we're here. Perfect. Great. Last question. Vegas or Nashville? Just kidding. Okay. Anyway, perfect. Thank you all so much.
Miami.
Thanks all for your time. Thank you everyone for joining us. Appreciate it.
Thank you.